Yo guys, so for today's video, right, I'll be covering on the two recent launches which happened last weekend. The first one will be LyndenWoods, which achieved a 95% sold on day one, and then the second one is in contrast of the first project, W Residences. So this is a branded residence in the CCR area, which I heard on the ground, I don't think they sold any units on day one, and on the Sunday, they actually sold a few more units, but as of now, when I look at the app, I don't really see any units being sold still. So there is a very big difference between these two projects, and today I'm going to be sharing with you what I feel about the direction for the market moving forward. And I'm quite sure with all the recent CCR projects coming up, and agents do talk about the RCR and the CCR price gap narrowing down, maybe you should consider CCR properties. So for today's video, I'll be touching on all those and why the stark difference between these two developments on the same weekend. So stay tuned. So first up, I want to be talking about LyndenWoods. So for this development, they actually achieved 94.5% sold on day one with an average PSF about 2450 PSF. And from what I see on the ground on the balloting day itself, I do feel like, of course, some of them, if they bought during the VIP or the earlier queue numbers, you're getting in a good price. But as we progress on to the later stage of the sales, right, which is the higher floor units, maybe 20th floor and above, I feel like some of the buyers actually start to FOMO already. And I mean, to be honest, I'm not surprised because the number of checks was quite oversubscribed. We are looking at 300 plus units with 800 plus checks. And for the higher floor units, I do see some of the PSF transacting between $2,600 to $2,700 per square feet. And do bear in mind that this is a 24th floor unit. You still need to add in about 7 to 8% for harmonization to exclude the AC latch. So this actually results in a PSF to range between $2,800 to even $2,900 per square feet. Okay, so right now I'll be talking about the LyndenWoods booking day. As you guys know, for new launches, usually they split it up into 2 days in order to facilitate the flow better. So on Friday, it will be the VVIP booking, staff booking, bulk purchase. And for LyndenWoods case, they had the 3+ study and the 4 bedders combined together on the VIP day. Alright, whereas the other 2 bedders and 3 bedders, they are all on the Saturday itself. That one, of course, will be according to the ballot number queue. Talking about the VVIP day, I was quite surprised, right, at the take-up rate for the bigger units, especially from the 3+ study and 4 bedder buyers, because for those units, a lot of them was actually sold. And I think this was quite interesting because it does shows buyers' confidence, especially when the quantum hits over 3 million, some even over 4 million, and they are still quite bullish in this area. I think this is something to take note. Of course, they are not stupid, right? They have this kind of money, and if they themselves also can see the direction and the potential of the Cambridge area, I mean, I would say this area does have something coming up. So of course, I do study the master plan and also the government's direction for the One North area, Metropolis area, and I can see why people are bullish on this area. But at the same time, when I see the prices being transacted here, the quantum, the PSF, does it still make sense, especially if you are an investor? Of course, if you are a buyer, you like this area for own stay, no issue. I don't see a problem at all. But if you are buying with the intention of making money and maybe rental income along the way, will this make sense still? Now let's take a look, right, on the prices that is shown on the VIP day itself. Then you can kind of see what I'm talking about. So over here, you can see quite a few units being sold on the stack 2, which is the 3+ gas. And then we have the 23rd floor unit, which is 23-02. So this one, the asking price was at 3.25 million, 2519 PSF, and the square feet size is 1292 square feet. And do bear in mind that this is inclusive of the AC latch, okay? So you can see, based on this budget range, right, 3.2 million, actually there's quite a few other launches also offering this kind of quantum. They might not have the same attributes being that near MRT, but of course, in terms of value buy, is there other alternatives? So at this point, when certain units are being transacted, I look at the options the clients potentially can have. I feel like, I don't know whether they have fully explored their options yet, because when I see here 3.2 million, actually if you look in the new launch market or even the resale market, sometimes even the landed side, there is quite a few options available on it. Yeah, so I don't know if this is really, they feel that this is a value buy, or is it FOMO, or is somewhere that they really like this development and they can see themselves staying at Science Park area. And now just to run through the other bedroom types, you can see, for example, at stack 1, we have the 721 square feet unit. So the asking price was at 1.94 million, and this is at 2699 PSF. So same thing, almost at a 2 million quantum. Is there possibility of getting a 3-bedder in the OCR region? Have they considered that? Of course, I'm not too sure lah. Yeah, then if you take a look, the other notable ones I think was quite surprising was also the 2+ study. So some of the 2+ study, especially the 883 square feet, the 850 square feet one, right, they actually crossed easily the $2 million mark, and this will actually put them up very close to some of the OCR 3-bedroom pricing, especially in the new launch market. So these are units easily crossing the $2,600 per square feet. So for example, for 2407, this unit was asking already at 2693 PSF, and then you still need to convert back to harmonized one. And the 2+ study for stack 8, 2408, this one was at PSF asking of 2699 PSF. Okay, so now for the interesting one, which was quite surprising for me as well, is the take-up rate, right, for the 4 bedrooms over here at LyndenWoods. And then you can see for the stack 15, majority of the units being sold was already all cleared, other than level 2, but all of them was being sold. And here we only have 20th floor just to take reference. Of course, now I think post-launch, I'm not sure if it's still available, but after the VIP booking day, we still have this unit available. And this one, 1647 square feet, asking price of 4.1 million at 2492 PSF. This really gets me questioning, like, wow, this area, if you really buy at this price, can you actually make a profit and exit this area easily? Because when I look at the options available, 4 million plus quantum, right, you can easily get a 5-bedder, OCR, some projects even in the RCR region, and you can even get a landed. Of course, it depends on the condition of the unit lah. But of course, if you're buying for own stay, own consumption, nowadays it's quite rare to find a 4-bedder of this size. So I think you must be very clear in your objective, whether it's more for investment or is it more for own stay usage. So later on in this video, right, I'll also be covering on the various options that I feel can also consider versus this unit, because at $4 million, I just did a quick search and I can easily find other new launch project which I would consider even more prime area at the same price tag and also bigger unit. So I think all these things boils down to personal preference and also how you perceive the area itself. To give you guys some sensing, right, I'm going to be talking about the Orie, so you can kind of feel. For Orie, this is a 40th floor project, and for LyndenWoods, it's up to 24th floor. Then you can see the per floor jump, whether it still makes sense, because Orie is Toa Payoh area, of course it's more mature as compared to Science Park area, and at the same time, it's kind of near MRT in terms of distance. So I think this is quite an okay comparison towards LyndenWoods. So now let's take a closer look for the Orie units, and you can see for Orie, right, the launch day itself, some of the 2 bedrooms, they already crossed the $3,000 per square feet. But of course, they are all on the very high floor range. They are in the 40th floor, 39th floor units. And then if we just now take the LyndenWoods units, right, 2006, 2007 transacted, and then we convert to the harmonization, we are looking at $2,800 to $2,900 per square feet. And this is for 24th floor. So of course, when you look at what is transacted at the Orie, 3,000 plus PSF for 40th floor. I mean, if you convert per floor jump, it might still make sense, but at the same time, this is gonna be almost very close pricing to what we see at Toa Payoh area already. So maybe you can leave in the comment section if you feel like for Kent Ridge area, One North area, does it justify a similar price tag towards Toa Payoh area, or you feel like it's something that you can consider other options instead? Do let me know. But of course, with every booking day, it is not complete until we have the dropout units, right? Because this is not my first time, and I have seen multiple times every launch there is always dropout units. So that's why earlier on in the video, I did talk about the feeling of FOMO, and here we can quite obviously see the number of units being dropped out. So here we have a total of 9 units available, ranging from 2 bedroom, 2+ study, all the way to the 3 bedroom types. But I was quite confused because I think, like, let's say for example, we take this unit 0304. So this one is a 635 square feet unit. The price, this is bounce out pricing already, right? It's already at 1.4 million. I would still say, if you look at the PSF, actually quite okay, 2,200 range. Then if you just add harmonization, in terms of entry price and quantum, actually quite okay. But I was quite surprised the unit still bounced out, because here, maybe the buyer overstretched already, then they feel like FOMO. Because for 0304, right, my client was also aiming for stack 4, stack 11, and I know that for this budget type, the unit was actually snapped up pretty fast. So the buyer, maybe they didn't have that much time to evaluate their options, and by the time their turn came, this was slightly out of the budget range already. But to be honest, if at 1.4 million plus your budget range is out already, right? There isn't much options anymore. So that's why I'm quite confused. Like, I can understand, let's say this 1904 unit, the after discount price is 1.6 million. Yeah, maybe their initial budget was 1.5, but due to FOMO or that, then they wanted to up their budget. Then maybe they felt at 1.6 they overstretched. But at 1.4 million range, right? Honestly, I just feel like it's quite weird to have this unit drop out, because I think most people budget range is around there already, minimally lah. Then if this is too stretched for you, then I just feel like it's quite strange. It means probably they are just playing around. But if you actually drop out the unit, very likely you still have to pay the forfeit fee of 1.25%. So I mean, of course, for my viewers and also my clients, I really hope that you guys don't have to go through this, because it's so painful and it's totally not worth it at all. Then now if you look at the other units, for example the other 2 bedrooms, right, you can see some of them creeping up in the $2,600 per square feet range. For here, I mean, I can understand why you actually would drop out, because wow, in the end you feel like you might be overpaying a little bit, or you overstretch your budget. Of course, this one I think can be easily avoided if you actually did the math and have a walkaway price beforehand. And some of these units, you can see like the 2 plus study, right? They already crossed the $2 million mark. Some, you see that this 2 plus study even crossed the $2.3 million mark. Yeah, so I think this one you need to consider your options right before you go for this new launch, in order to not suck into this FOMO now, because this person I think easily forfeited at least 20,000 or more. Yeah, I think all these are very expensive, and I hope you guys don't have to go through this. Okay, so now let's take a look at this Business Time article, right? They did mention that CapitaLand sold 94% of LyndenWoods at an average of 2450 PSF, and then IOI's W Residences Marina View suffer poor take-up rate. And then you can see over here the article, they further elaborated on this poor response at W Residences Marina View. So for this, the developer, they never released the data, right, publicly on newspaper or that. That's why even for agents ask, we can see the app, right, for the number of units sold and what is the take-up rate. We don't have the information. The prices are not even labeled per unit. So that's why I don't know what is the developer gonna do with this development, because they have a lot of units to sell. So the article did mention one reason for the poor sales, because maybe foreign buyers are giving the Singapore property market a miss. Since now the recent buyers, about 98% actually comes from private buyers, actually coming from locals, alright? And another reason why the article say W Residences could have suffered poor sales on launch is because there's a lot of upcoming new launches, and these are just not in the OCR, RCR region, they are all also in the CCR region. So that's why I think nowadays, I'm sure you have heard about agents talking about, oh wow, CCR now, supply of launches, is this the opportunity to look at? This one later on I will cover a little bit more, but for now, let's talk about W Residences first. So for local buyers, right, they might not want the CCR properties if they exceed certain threshold. Like for example, here they say 3.1k PSF. So that's why I think reputation for all these branded residents is not a very desirable thing from the locals. I mean, from my clients, I talk to them, not many actually desire this kind of property. So that's why I think quite evident in their take-up rate on the launch day itself. I think their pricing wise for branded residents is quite okay, but at the same time, I think this might not be the best time for this kind of luxury and niche product. Then now I put the prices, right, for W Residences side by side with LyndenWoods. You can kind of see the difference between the two. So one of it is W Residences is a branded luxury. You can see the way they market the property. It's targeted at the affluent, for people that like luxury, they want the address, they want the prestige. And then you can see for their one bedder already starting from 1.8 million for 500 plus square feet unit, 2 bedders from 2.5 million, 3 bedders 3.8, 4 bedder 9.4, and 5 bedder 11.6 starting from. So definitely this is not targeted at majority of the Singaporeans. It's really for the top 1% or even the top 0.5%. Whereas contrastly, we have LyndenWoods. This is in the RCR area. Yeah, definitely it's not the most prime because it's Science Park area, but it is still very convenient with the shopping mall and also towards Kent Ridge MRT. And then you can see the pricing starting from $2,100 per square feet, 2 bedders at 1.39 million, 2 plus study 1.95, 3 bedders 2.35, 3 plus gas 2.88, and then 4 bedders at 3.58 million. So I would say these two really different in terms of target market, but overall the stark difference you can see in terms of the take-up rate. So I would say this also kind of can translate towards the developers' behavior, right, which I will touch on a little bit later. And you can see they start to bid very aggressively for some of the more heartland GLS. Just now I did mention for W Residences, one of the other reasons why I think the take-up rate was so poor, right, because for the CCR buyers, you must remember, right, for CCR, you're already targeting quite a small portion of the private property market, and on top of that, now you need to fight with other CCR new launches. So for W Residences, they are going to be competing with these 4 upcoming launches. So these two, first up will be the Robertson Opus and Upper House at Orchard Boulevard. Next up in the CCR region, we have Promenade Peak and also River Green. So River Green will be at the River Valley area, whereas for Promenade Peak, this is at the Zion Road area. And then you can see, right, here the prices are for the 1 bedder for River Green starting from 1.2 million, and River Valley you can buy starting from 1.2 million. It's quite unheard of, and especially the 4 bedders at 2.8 million. Of course, I haven't done a review for this. Stay tuned for it because I'm going to be doing a review, the comparison between these two developments. But for now, I feel like I just want to frame your mind of what's coming up, and especially after this recent launch of this CCR property, W Residence, and also this RCR launch, which very strong take-up rate. It will be quite interesting to see how the remaining CCR developments actually unfold, especially when, for example, you see River Green is very small unit types, very palatable quantum for investors, but for own stay wise, I think it's a whole different ball game. Whereas for Promenade Peak, right, you can see the sizes are bigger, so that's why you can see the 1 plus study 527 square feet starting from 1.4 million, and then you have all the way to the 5 bedders, right, 1,800 square feet, and then prices starting from 6.2 million. So these are all totally two different products, but very similar in terms of the locality. I think that's why as a consumer or buyer today, or even an investor, you might be a little bit confused because there's so much choices even just for the CCR region. But I think it's more important to look past the noise and all that, and then we see what the data actually says. Okay, so over here, right, I have the CCR new launch versus resale for pricing and also the volume. The main thing I want you guys to take note, right, is the volume, which is the bars. So for the new launch CCR, they are blue color and the bars is also in blue color, whereas for the resale CCR properties, you can see these are the pink color ones, and then the price line is over here. So the first thing I want to talk about is actually on the take-up rate, right, for the new launches for CCR. And then you can see, actually for new launch, starting from this 2023 period, right, the volume started to drop drastically because of the ABSD measures by the government. So you can see the blue color bars actually all dropped quite a lot. But what was surprising, right, was the resale in the CCR market. And then you can see actually for CCR resale, it still remained very strong, and the supply, the volume for CCR resale still remained quite stable as compared to 2020-21 period. So I would say this ABSD really targeted at foreigners, and the moment when the new launches drop, right, of course you can say some of it come from local demand, all that, but at the same time I can't stress enough the importance of all this CCR new launch luxury segment or even the other parts of CCR, the buyers that coming in from the foreigner side. I think those is a very important factor, especially to help boost up the take-up rate here, because as of now I still see CCR new launch, the take-up rate is quite poor, but when you hit the resale market, actually is still quite decent. So that's why this can actually help you frame whether this area you are confident that it will perform in the resale market or not. That's why when I look at all this volume for resale CCR, it does look quite okay. The CCR new launch one does look a bit concerning. Other than that, I think more importantly for investors, especially when you have heard a lot about those River Valley plots, Zion Road plots. For me, right, very simple. When you buy a property, especially for investment, I always look at the main thing, which is volume, and this also translates to your exit liquidity in the resale market. Not saying that CCR cannot buy, but when you look at CCR, this is purely CCR alone volume. If you look at CCR versus RCR and OCR, right, you are targeting a much wider audience in the private property market. Because when you look at CCR, it is mainly targeting at maybe the top 5% or 1% in the market. So that's why when I talk to my clients, especially for investors, sometimes CCR might not be the best bet, because in the end, if you look at the numbers, right, I've done the analysis for Orie Vs in the resale market. I can see that some of the units, even the bigger size one, it's made for own stay. You can see the home element, the development is quite okay overall. Area also quite okay, but to actually get the unit to sell at like $3,000 per square feet, right? The unit actually was on the market for quite long. So when I look at investment, because I also do investment for my own, the main thing is always exit liquidity. And like when you compare property to stocks or this, property is already considered a lot more illiquid as compared to the stocks or this. And then now, if you are an investor, you're going into CCR, right? Does this make your purchase actually even more illiquid? Which means who is your potential exit buyers? So these are all very important factors that I go through my client even before we get caught up in the hype. Because I think really now, a lot of people are saying the same thing. Wow, RCR so close price to CCR, does it mean CCR can buy? Is it undervalued? So all these things, you really need to look past the noise and then see the numbers to actually make an educated guess. And to be fair, when I look at the demand and all that, honestly, I won't be surprised if OCR, RCR actually surpasses CCR, because the government's decentralization plan actually worked. And now maybe they feel like it backfired, they're trying to salvage the CCR part. But overall, I just feel like it's very successful on the government's move. Yeah, so maybe you can leave in the comment section if you do agree with me and you feel like actually maybe CCR no longer seem that attractive to locals anymore, but OCR and RCR, people there might be an increasing trend that people are willing to pay higher for all these more heartland areas as compared to the CCR region. Alright, so now let's take a closer look at one of the biggest shareholders in our private property market, the developers. So right now, what I want to do is study the behavior for developers, because you see, so far I've been talking about buyers' behavior in our resale market, new launch market, but I think the biggest boys will be on the developers. And then you can see these recent 3 plots, they are in the heartland areas: Lakeside Drive, Chuan Grove, Bayshore Road GLS, and all slated to launch next year. Then you can see these are all very big names, minimum of 6 different developers, up to 8 bidders for that one particular plot of land. And then you can see the pricing for Lakeside, land bid price 1,001. Chuan Grove, land bid price 1,003 plus. Bayshore, 1,388. So for all these land bid prices, I think I can safely say they are quite aggressive, especially for heartland areas. So that's why when we look at all these data and numbers, the big boys, which is the developers, they have the entire team of analysts forecasting demand, forecasting supply for OCRs, RCR, CCR area before they even want to bid for the land. So with all this, I do feel like the developers, they have a better understanding of the market in terms of demand and supply as compared to individuals like us and even consumers. So when I see all these developers bidding so aggressively, it really gives me some doubt and also confidence at the same time. So the first one is like, why can the developer actually forecast OCR region selling at this kind of pricing, and they are all profit driven? So the fact that so many developers actually bid for this kind of OCR land at such a high price, are they really confident that they are able to sell at this PSF? And I mean, as a buyer, will you be able to accept this PSF? But at the same time, with all their analysis and their big team of analysts, I would say they probably have certain data that can support this justification for the pricing. Maybe the demand is coming from the HDB upgraders, or they see that this area there is a shortage in supply, etc. So that's why when I look at all this, it does give me more confidence to advise my clients on certain regions to avoid and certain regions that I feel has more exit liquidity. So that's why this is how I look at, and I also observe the developers. they do bid for this kind of plots quite aggressively nowadays. And then of course there is a recent plot, the Dunn one, which is under CCR, also quite aggressive, but other than that particular plot, the rest has been quite muted overall. So just now I did talk about the CCR, RCR and OCR in terms of exit liquidity. Over here, the blue color line is CCR, this one, the middle one is RCR, and then the last one, the pink color one will be OCR. This is for the resale side because we're talking about exit ma. So here you can see very obvious, the pink color line stands out the most, which is OCR resale market. You can see where this is majority of the volume comes from, and I would say this can safely form your exit liquidity. Whereas when you look at RCR, it starts to drop. It's probably about half of what we observe in the OCR region. And then last but not least, we have the blue color one, which is the CCR region, coming in at almost half or even 3/4 of RCR region. So that's why I think you must be very clear in your strategy, whether it's buying for own stay or is it buying for investment. I think these two cannot be overlapping most of the time, and yeah, if you want to find out more which one actually suits your individual needs more, you can feel free to call me or reach out to me at WhatsApp 84849302. Looking forward to hear from you guys. Alright, last but not least, this is the alternatives for the $4 million price tag at LyndenWoods. So from that discussion just now, I did have it with my other client who was asking me, hey Sinric, actually for 4 million plus, you think this place can enter or not? So that's why I pull up the app that's showing the current supply at this budget range. I was quite surprised to actually see, hey, at $4 million, you can actually get a D15 property at Tembusu Grand. This one you can see, this is a 5-bedder, 1711 square feet, and price tag is less than 4.1 million. Maybe you can leave in the comment section below. Do you think buying at Tembusu Grand, maybe Tembusu Grand, yes, the district is very good, Katong area, but it's not that near MRT, and also it has a multi-story car park rather than a basement car park. So for all these factors, does it justify paying a higher price tag for LyndenWoods high floor unit, or would you rather stick with a D15 Tembusu Grand condo? Okay, then you can see this is the layout. Definitely is very fantastic because it's huge, 1711 square feet. Honestly, you can't really go wrong. It's just more of the price tag, whether you can accept at this range, and of course you have to compare whether you can buy similar sizes for the other condos in the area for the price tag, or you can even consider smaller landed sizes. Yeah, but of course this, I won't touch too much on the layout now, but this is basically what you can expect at the same price range. Maybe you guys can let me know. Alright, so you guys can see the differences between the launch day for LyndenWoods and also the launch day for W Residences in the CCR area. I hope you guys, my viewers or buyers, you don't fall into the FOMO because there is 4 upcoming launches in the CCR area. Don't be clouded by the noise and always be objective in your purchase. If you are buying for own stay, of course, I don't think this is going to be relevant to you. If you're buying for investment, all the more you have to always study the exit liquidity. Alright, if you like my video so far, you can leave a like and subscribe. And also, if you like this kind of content which is deep and analysis, you can check out my YouTube channel for other videos that I've done on the recent launches, and then you can see how I actually analyze the different projects. Alright, so that's it for me today. If you like a personalized consultation, you can reach out to me at WhatsApp 84849302. Looking forward to hear from you guys. Alright, bye!